Good evening and welcome back to Smart Investment Long Video. When we talk about Indian automobiles company with a strong brand, clean balance sheet, and a long-term growth visibility, one name consistently stands out: Eicher Motors. In today's video, we will break down Eicher Motors from a fundamental perspective, covering its business model, key segments, market leadership, financial performance, growth drivers, risk, and long-term industry outlook. This is a business analysis, not a stock tip. So stay till end to understand what truly drives the company. First is company overview. Eicher Motor Limited is a flagship listed company of Eicher Group and operates primarily across two major verticals. First is the Royal Enfield, which is the backbone of the company and a global leader in the mid-size motorcycle segment. And the second is VE Commercial Vehicles, a joint venture with the Volvo Group, which operates in truck, buses, engines, and engineering components. Royal Enfield alone has transformed Eicher from a clinical auto company into a brand-led premium mobility business, while VECV provides diversification and exposure to India's infrastructure and logistic growth. Now moving forward, let's take a look on a Royal Enfield. Royal Enfield is the single most important value driver for Eicher Motors. The brand dominates India's mid-size motorcycle segment with over 80% of market share, making it virtually a monopoly in this category. Unlike mass market two-wheelers, Royal Enfield operates in premium lifestyle space where customers buy into brand heritage and experience, not just a price. The product portfolio spans the Bullet, Classic, Hunter, Meteor, Himalayan, Interceptor 650, Continental GT, Super Meteor, and the newer launches like Guerrilla and the Shotgun series. This premium positioning gives Royal Enfield strong pricing power, high margins, and loyal customers, a rare combination in automobile industry. Now moving forward to global expansion and export story. Another key pillar for Eicher Motor is its global expansion. Royal Enfield now operates across 60 plus countries with assembly plants in Asia and Latin America and technical centers in India and UK. Exports have emerged as a meaningful growth driver, reducing dependence on the domestic market and positioning Royal Enfield as a global mid-size motorcycle brand. This global acceptance significantly improves long-term scalability and a brand valuation. Now let's take a look at VE Commercial Vehicles. While Royal Enfield grabs attention, VE Commercial Vehicles or VECV plays an important supporting role. It operates across trucks, buses, engines, and components, benefiting from India's infrastructure push, replacement demand, and freight movement. Though the commercial vehicle business is cyclical, the VECV provides diversification, steady cash flows, and exposure to economic growth, balancing the lifestyle-driven motorcycle segment. Now looking into financial performances and the ratio of the company. From a financial standpoint, Eicher Motors stands out for its discipline and consistency. The company has delivered strong revenue growth, healthy operating margins, and rising profitability, supported by record motorcycle volumes and improved realization. One of the biggest strengths of Eicher is its near zero debt balance sheet, which reduces financial risk and enhances flexibility during downturns. Return ratios like ROE remain robust, reflecting efficient capital allocation and strong brand economics. Eicher's valuation multiplies appear premium, but that premium is backed by brand strength, clean governance, and a long-term visibility. Looking into company's future growth drivers. Multiple growth drivers supports Eicher Motors' long-term growth story. Premiumization into two-wheelers continues as disposable income rise and consumers upgrade from commuter bikes. Exporters are expected to scale further as Royal Enfield strengthens its global presence. The company is also investing in future mobility, including its electric sub-brand Flying Flea, signaling readiness for the next phase of urban mobility. On the commercial vehicle side, infrastructure spending and replacement demand remains structural tailwinds. Here are the key risks to watch. Like any businesses, Eicher Motors is not without risk. Rising input can cause pressure margin. Demand slowdown in rural or discretionary spending may impact volume. Execution risk around new launches and electric mobility investment also remains. However, Eicher's strong balance sheet and brand-led pricing power provide a meaningful cushion against these challenges. To sum up, Eicher Motor presents a rare combination of heritage, premium branding, financial discipline, and a long-term scalability. Royal Enfield's dominance, growing export, stable commercial vehicle business, and future-focused investment make Eicher one of the most structurally sound companies in India's automobile space. For investor and business enthusiasts, Eicher Motor is a text case of how strong brands create durable economic moats. If you have enjoyed this fundamental analysis of Eicher Motors and want more such clear, noise-free breakdowns of Indian business and markets, subscribe to our YouTube channel. Thank you for watching.